and we are basically in full swing of the spring summer market, and it has been pretty busy and a lot of fun this year. Here just basically working with our clients and getting things done. And we've had a really successful time. My name is Bill Stewart. I am a real estate agent here in the greater Greenville area or upstate area of South Carolina. I work for Remax Moves. In Simpsonville, South Carolina. I am a solo agent, and I have a small team of people that work with me to help deliver high quality service and help to execute on behalf of our clients, whether they're buying or selling. So, and we are talking with sellers and buyers. I talk to them every day. And one of the things, I get a lot of, sometimes I get a lot of opinions. I get a lot of facts kind of thrown at me. Much like everybody else, I see national headlines that are talking about the market and what's going on. And one of the things that I saw the other day was 500,000 more homes than there were buyers in the marketplace. And it was like this just kind of like ripple panic of like, oh my gosh, the market crashing. And so it really got me thinking where I was like, man, there's, if I heard that, what would that do? And as a real estate agent, anytime I hear, obviously I'm like, when there's market change or market things that are happening in the market that would affect our clients or our business, like obviously you get a little bit nervous. So just had me thinking like, let's go back and take a look at a couple of different things. So I just wanted to say first, real estate is very local, okay? When you look at national averages, the national average doesn't necessarily mean what's happening in Greenville. We could either be better than that, we could be worse than that. It's a statistical average across the entire United States. But you've got some situations that are happening with the condo market in Florida that are having an impact on not only the Florida market, but because of the sheer population and the amount in the volume of condos that are being affected by this, that idea of like what that does in terms of how that dilutes certain things or things that are happening in Texas or in California or in Chicago or New York or all of those things. Major metropolitan population centers, if there's things that are happening in their markets, it's definitely going to have an effect on a national average. But that doesn't necessarily mean we're going to be impacted, but it also doesn't necessarily mean that even if we are impacted, we're going to be impacted in the same way. Real estate is very, very, very is a local. It boils down to, it's not just about, it doesn't matter what happens in Greenville. It's going to happen what's going on in your neighborhood, what's going on in your surrounding area, the neighborhoods around your area, what's going on in your town, what's going on in the city, in the region, those kinds of things. Those are going to have a much broader and a larger impact to the real estate market here. Because of those are going to be the things that are going to drive and really kind of impact overall. Everybody across the board is going to be impacted by interest rates. Every market's affected, with interest rates. Some more than others, but the reality is like it's going to have an impact no matter what. And then at that point, it's also the fact that we're coming out of COVID. 4 years ago, 5 years ago, it basically was like we couldn't go to the office. People had to work remotely. At that point, it kind of untethered people from being in a location because as long as they had an internet connection, they could live wherever they wanted. So that allowed you to move out of areas like California, New York, Chicago, these major metropolitan areas where the cost of living might have been higher, to go in search of a better quality of life and find a home that would be where you could transfer equity from one to the other, and that it was perceived as a deal. It was still market value for our area, and there was probably going to be an argument that we needed a price correction at some point down the line because we might have been undervalued. But what it means is that those days are over. Like at least for right now, the concept of a lot of companies are having people that want to move back, so the flexibility is not there anymore. So it's definitely had an impact. We've definitely seen changes. We've definitely felt things shifting over the last 3 or 4 years. So it's no surprise. But is it going to fall in? Is it look like there's going to be a crash or anything else like that? I would say I come from an accounting and finance background. I look at trends. I'm seeing, I look at numbers all the time. I don't see that there's a crash, but who knows what tomorrow is going to bring. But the reality is there's no data that indicates that that's where we're headed. In fact, I think that we're actually doing pretty well and that our market is balancing itself out. It just feels different. And so that can sometimes kind of alter our perceptions. So what I looked at today was I just wanted to pull, just kind of comparing, hey, where were we, from January, for the first part of last year, January to the end of May or the beginning of June, and how are we doing compared to that this year? And so I just pulled up MLS. I'm just looking at a couple of things I pulled in. I'm just looking at sold inventory. First of all, I'm looking at residential sold inventory. I'm not looking at every unit that's sold, commercial, land, all of that. I'm literally just looking at residential, and I'm doing a raw dirty. I know there'll be some people that will look at this and be like, well, you didn't look at this, you didn't look at that. I'm looking at this just generally. If I really wanted to do more analysis, I would do something deeper, but I just think it's interesting to see that when we look at last year this time, we sold 6,545 homes. Days on market were 51. We were looking at an average days on market. We were looking at an average price point of $374,000. Okay. And we sold $2.5 billion in total volume in that same amount of time. So, it was even with interest rates that were high last year, this time, the market was moving, but we've had some impacts. We went through an election. We've seen that interest rates have not come down. So I see 500,000 more homes available today than there are buyers. Makes me think, all right, well, let's go take a look at how are we comparing ourselves to last year. And so I ran the same analysis, January 1st until now, just kind of running to see where we are. And out of that, we basically sold 7,200 homes in the same time frame. We're up a little bit. Instead of 51 days on market, we're sitting at 54 days on market. But we're seeing that the price point moved up from $374,000 to $422,000. Now, does that mean that we saw an 11% change in price across the board for all homes? No. I mean, yes, we see about a 9% adjustment, a 9% increase or a 10% increase. But before we go out and start adding up the numbers on our homes, the reality is it boils down to what is selling in this marketplace. You got to really drill into what's moving, what's not moving, and those kinds of things. Because if I sell $1 million home and I sell $1,000 home and I put the two together, it averages at at 500,000, or 550,000. But that doesn't mean that the $100,000 home is now worth 550,000, if that makes sense. So we got to look at a couple of things. So that's where looking at this here, this is just showing home sales as it relates to specific price ranges. Okay, so when we're looking at the price ranges in here, what I want to look at specifically is I want to look at where are the price points that are moving the highest, okay, out of the closed units, right? What they are. And this is what kind of where 100,000, 150 to 250, up 3.6%. We're up 11.2% in the 250 to 350 range. But really where we're seeing the biggest movers is the 750 and over $1 million is up 21, 23. You're up 11% here in the 500,000 plus. Okay, 350 to 450. You just seen this dramatic jump in volume and sales price that's ultimately driving these numbers up. Okay, so it's not necessarily that we've seen a 10% increase overall. yes, we're seeing about a 7.8% change in all price points, but that doesn't necessarily mean that the price point that your home sits in, that it's actually up by 11 or by 7.8 or 9%. It just means that if I take all the numbers and I just divide them by units sold, then that's the number I get. So what that also means is that it's not across the board. Doesn't mean that like I bought my house at $250,000 a year ago, it's up by 10%, I should do this. No, because again, it's local. It's local. Real estate is extremely local. So that means that we have to take a look at your neighborhood, your region, your location, those kinds of things to really get an understanding of like what are homes selling for in and around your property before we could actually like say, are you up or down? And so it's also, it's an interesting thing, but you are up in inventory in terms of your active. I'm just going to look and see if they put the actives in this. So month supply, when we look at our month supply here, we have a 44.6% increase in month supply on $1 million plus homes. So you got a lot more inventory sitting out there on the market in these price points because they see that demand is up. But at the end of it, it still comes down to making sure that where we are. So we have a lot more inventory overall. Our inventory's up in total about 43%. Now, this report was done at the end of April. So I just want to make sure that we're being clear on the fact that that is not an act. That's not as of today. That's just the report that comes from Greater Greenville Association of Realtors and lets us know what that just kind of like where we stand. But a 43.3% increase in overall inventory compared to last year this time is a pretty significant number. However, we've also sold another 700 homes compared to where we were this time last year. So yeah, I mean, I think people have been trying to figure out how they're going to time the market and things like that. But what I would say is I don't think that there's not a lot of things. The market is not necessarily bad, but I think that there is some confusion in the marketplace right now in terms of home values. And if I'm going to try to sell my house, what can I sell it for where I'm at? And I talk to a lot of sellers about these kinds of things where the idea is that I think my home is worth X and I'm not going to sell it for anything less. The definition of market, of the real estate market, of any market is what a seller is like willing to sell for, what a buyer is willing and able to pay. Your supply and demand. I could have the greatest house, but if it's too expensive for somebody else except for me, at that point, nobody's going to buy it. And so if you're the only house available, potentially you will find a buyer that's willing and able to pay because of the fact that it's the only thing available. But when you start to see supply side move up by 44%, and now buyers have more options, the reality of pricing and what that means and like the technical side of how to price strategically in order to attract that buyer and get your home sold is becoming harder and harder, which means that your days on market are getting elongated, and your days on market by price point are also going to vary. So you really have to be able to like take a look at like what's going on specifically in and around your house. What are buyers willing and able to pay? Where are we at? What are we comfortable with? And that's not saying that if the number that you get in order to be able to sell your house today, what market value for your home would be, it doesn't necessarily mean you have to sell it. It's just, it is what it is for right now. That's at least the ballpark of market property. But, I see a lot of sellers that are interested in putting their houses on the market. But what we're really having conversations with sellers is how to create the market for your home. Your home, building a marketplace for your home and having it be an obvious choice in the marketplace for buyers when they're evaluating back and forth. Because buyers are going to evaluate your home the same, like they're comparison shopping. If they see that they don't like it, it doesn't matter whether or not the appraisal set at $600,000. If I don't perceive that the value is as good as the other 2, 3, 4 other alternatives out there, then they're not going to, then your house will sit on the market for a long period of time or may never sell. We may just pull it down. And that's where I think a lot of people, we're seeing increased number of expired listings, which is listings that went on the market, failed to sell, their listing contracts ran out, and then the sellers just gave up and didn't go back on, or withdrawn properties where basically you pull off early because you're not getting what you're looking for. And I'm seeing a higher number of those recently than I've seen in the last couple of years. And it's a lot of it, I think, is just exhaustion with that the idea of like what maybe they're being told or what sellers are expecting out of the market, which I hear we'll just price it at this level and then we'll wait for a buyer to come in and we will have wiggle room to negotiate. The days of right now, this is not the market where wiggle room for negotiation can be added into the list price, because you've got 15 other alternatives out there that buyers are evaluating. So if you are too high, they're just going to go somewhere else. So I like to tell our clients, we're either selling this house or our house is being used to sell other people's homes, I should say. So again, it's creating a marketplace. From a buyer perspective, hey, it's a totally different landscape now. I mean, obviously 7% interest rates will definitely scare some people off, and deter people from doing it. Like, it really boils down, but just like anything else, buyers are becoming more focused on benefits and value than they have in the last, than they have had to in the past, because of the fact that at 7% interest rate, I'm really having to focus in on that renovation project. Like, I'm not going to have enough to be able to do that. So if I walk into a house and it looks like it's going to need paint and it looks like it's going to need carpet and it's going to need stuff, like, I'm not even going to make an offer. Like, if the house is not up to spec for the price of where they are, they're not willing to let things go the way that buyers were letting things go potentially in market where there was not enough supply. Because at that point it was the only option. So not doing those projects, like walking in and looking at a house and seeing where it is, there's a lot of things that are leading to why the market is where it is. And condition is going to be, outside of price, your condition is going to be ultimately the biggest driver on whether or not you're going to sell your home at the price that you're asking, or will it be below? Maybe it'll be above. Or it may not sell at all. And so, and buyers are keenly aware of what they're looking for. Plus, they've also got a little bit more time than they had 2-3 years ago, where they can go and think about what they want to do. Is this the right house? And so at that point, first impressions, I think, in the real estate market right now are where it is. I feel like we're moving into what I would consider a technical market, that ultimately having the right team of people to help you digest, understand, evaluate, and then at that point, helping you to make an informed decision is crucial. I think also if you're a buyer or a seller looking at buying or whatever, if you have to buy to sell, I think the next best thing is to talk to a lender about options and having a great lender in your pocket to make sure that you understand everything that's there. And if you're also a first-time home buyer looking at new construction, it's evaluating what are all of the home builders offering and how could that help me, position to put myself in, how can that help me to be in a stronger position when it comes to finding a home that matches what I'm looking for. So anyway, there's so much that I could go into this. This is just kind of like a generalized understanding and just kind of getting us started in regards to like our conversations. We plan on doing a topic each week where we talk about whether it's home prices, market conditions, tips, tricks, strategies. I've been working a lot with and our team has been working a lot on really trying to help our sellers be savvy in this market, making good decisions, and guiding them through the process. And I will say that we've been very successful this year. We've been able to sell 98% of our inventory. We've been able to connect some buyers with some great properties, and at the end of it, but it doesn't mean that tomorrow, we're staying on top of it. So really, I think it's worthy of putting something out once a week just to kind of go through. So if you have a question, you have a topic that you're interested in, If if you want us to put a video together, we can do that. If you want to pick up the phone and just have a conversation, you're welcome to call me anytime. My contact information will be in the bottom here. And if you see any value in this content, hit like. We would love to, we would love to grow this. And then at that point, and hopefully that we're giving value back in a market that is somewhat, it's confusing at times. Sometimes I feel like I know what's going on. Then other times I'm just as lost as everybody else. But the idea is that we're constantly looking for answers, and at least at that point, trying to figure out ways to be able to help people navigate the best in all of it. So I hope you have a great weekend. Look forward to the next week, and have a great night. Well, happy Thursday. It is